investors should be doing now? I mean, mutual
I think
funds,
that two
do
things
you
are
think
there.
top-ups should be there
So
or
our
just
three things I
hold?
will say, right? First is assess your risk appetite. If you've got a higher risk appetite, this is a golden opportunity to buy into tariff affected sectors because there's an overreaction in the market. But bear in mind that things can get worse from today over the next few days. As the noise, as tweet after tweet comes, things could get worse. But if you have the jigger to handle that, then you should actually go and buy these where the heavy correction is taking place. But please make sure that your risk appetite, that you're not a person who lose sleepless nights because of that. Right? That's number one. Number two is if you are not like that, if you're a moderate guy who say, I don't want to avoid, then you stick to domestic oriented sectors today because only 20% of our GDP is related to external orientation, right? We have 2% share of the world's exports, right? So there are enough domestic oriented sectors where also correction is happening because when an emerging market FII sells it, he sells across the board. He doesn't
Right.
sell only those sectors. So a passive fund, if there is a passive emerging market ETF is seeing withdrawal of money, they have to sell every sector that they're holding. So today there are correction happening even in domestic oriented sectors. So that's a safer area to play. We are getting some correction. You're getting it cheap. So from an SIP investor who is in there for the long term, I would say this is the time for the next 2-3 months. Please double your SIP installment, right?
No,
Because rupee cost averaging works only when there is volatility. If the
true.
market is going every day up, then this whole rupee
Then it's
cost is a fallacy because every day you're
right,
buying more expensive, more expensive, more expensive. It's
right,
because there is a thing called volatility in the market that an SIP investor benefits from rupee cost averaging. So it's as simple as that, right? So to me, that's the clear. If you have the risk appetite, buy the riskier assets today. If you don't have the risk appetite, use the SIP route, increase the installment, and if you want to make your own allocations, make it into domestic oriented sectors, like banking, like discretionary consumption, like capital goods. All of these are not dependent on Mr. Trump's tariffs. So I
right.
say that, stay confident. And remember, the biggest advantage here is domestic fund managers are flush with money thanks to the support of the SIP book. Every month they are getting 26,000 rupees fresh cash to buy, right?
True.
So you empower them, they will make sure your journey is smooth and the wealth creation happens. So trust the mutual fund manager to make the right tactical calls. You don't need to make them yourself. So diversified funds, I would say multi-cap and multi-asset are the two should be the core form. Why I say this is fund managers make choices. But if you limit their choices in terms of the cap curve, then you're expanding their ability to choose the right stocks and sectors.